Hello investors, welcome to Proceemo, the value stock analyzer. Today is January 2nd, 2023. Happy New Year. Last week we got Meta with Facebook. This week we're going micro with Taiwan Semiconductor Manufacturing Company. Hope you're all properly seated for this one. Don't forget to like and subscribe. Your support will help us continue making content for you. And please check out Proceemo.com to check out the following analysis for yourself. Taiwan Semiconductor, based out of Taiwan, is the largest semiconductor company in the world. That's right, not Intel, not IBM, Taiwan Semiconductor. While Intel is off making super awesome chips that power your overclocked water-cooled gaming rig, TSM is making the chips that power your toaster oven. Now, that's a terrible generalization. TSM does manufacture really sophisticated chips like the Apple M1 processor and mobile phone chipsets for Huawei. They are also a very large manufacturer for less sophisticated chips for things like appliances, televisions, radios, toys, medical devices, and so on. In 2020, it was estimated that TSM produced 55% of the world's semiconductors. TSM is legit. Taiwan Semiconductor was founded in 1987, went public on the Taiwan Stock Exchange in 1994, and then went public on the New York Stock Exchange in 1997. AMD and Intel are both older than Taiwan Semiconductor, but TSM's ability to scale and be proficient at mass production has made them an absolute powerhouse. Taiwan Semiconductor has most of their fabrication plants in Taiwan, though they recently started expanding to Japan, the United States, and announced a plant in Germany. This global expansion is for good reason. TSM's biggest risk is the fact that they are in Taiwan, and there is a real risk that Taiwan is invaded by China, which would be devastating for the country and for TSM. We've all seen some global supply chain disruptions in 2022 as a result of the Russian-Ukraine war. A China-Taiwan conflict could create very similar disruption, especially for the semiconductor industry, which is already struggling from supply issues, and considering that TSM supplies the world of 55% of all semiconductors. These are some pretty big risks. Putting those risks aside for a moment, let's see the analysis. TSM is trading at $74.49, up 25% from their 52-week low of $60.28 from early November, but down almost 50% from their high of $140.66 from January of 2022. We say it all the time, all tech is down over the past year. TSM is no exception. Looking at some of the fundamentals, we have a PE of 13.47, earnings per share of $5.53. TSM is profitable, and they have a dividend, which we'll cover in a little more depth later on. All of this brings us to a market cap of $387 billion. By comparison, Intel has a market cap of $109 billion, AMD has a market cap of $104 billion, and Texas Instruments has a market cap of $149. TSM at $387 billion is larger than those three combined. I bet you wouldn't have guessed that prior to watching this. I was a little surprised myself. Implied growth comes in at 28.02%. Implied growth is a calculation on how much growth is expected from a stock based on past earnings. It's not a crystal ball though. At 28%, that means at this price, the market is expecting the company to continue to grow pretty rapidly. When we look at revenue, we do see nice increases over the years. Now, don't be alarmed by the numbers here on Proceemo, since their income is reported in Taiwanese currency, the new Taiwan dollar. That's what we display here on Proceemo. The new Taiwan dollar is about 3.3 cents of US currency, so revenue of 1.59 trillion Taiwan dollars is about 52 billion US dollars. We're more interested in the growth anyway. 5-year average revenue growth is 11.22% and 3-year is 15.81%. That's great. They'll be reporting 2022 numbers in just a couple of weeks. When we look at the 3 previous quarters from a revenue perspective, they are already ahead of where they were last year, over 1.6 trillion Taiwan dollars. Earnings are also looking really solid with a 5-year average growth rate of 13.40%. And judging by the first 3 quarters of earnings this year, TSM will likely have an absolute record-setting year. They have already reported 719 billion Taiwan dollars in earnings for this year, topping all of last year's earnings in just the first 3 quarters. Looking at the charts, we see revenue and earnings growing, and earnings really outpacing revenue the last couple of years. This is a great sign. It means TSM is getting more efficient with their operations. They're able to produce even higher earnings growth compared to revenue. Assets and liabilities are also growing, liabilities outpacing assets. We know they're doing a lot of global expansion. That's clearly on the back of newer debt, and that's okay. That's a great use of leverage for a highly profitable company like Taiwan Semiconductor. Let's go to the scorecard. Implied growth over actual growth is high at 2.09. We say a value of 1 would be a fairly priced stock, under 1 would be undervalued, and over 1 would be overvalued. We saw that implied growth was 28%, which is pretty high. Things that factor into implied growth are earnings, price, and dividends. Something to keep in mind. Liabilities over assets is healthy at 0.42. Steady dividend is false. Let's take a quick look at dividends. Over the past 10 quarters, we have increased from 44 cents a distribution to 46 cents. However, we were as high as 50 cents and as low as 37 cents. This isn't horrible, but it's not consistent. Typical value investors love to see consistency. The current payout comes to a yield of about 2.5%, which isn't bad by any means for a growing tech stock. Operating cash and dividend ratio is also healthy, and that's really important. Some other positive indicators: 5 years of increasing revenue, assets greater than 120% of market cap, and 3 years average revenue growth greater than 10-year average revenue growth are all true. Increasing revenue growth rate for 3 consecutive years is false. That's okay. 5 years of assets greater than 150% of liabilities is true. This is awesome. This tells us that they are responsible with their leverage. Enterprise value over market cap is skewed because of the currency reporting. The actual ratio is closer to about 0.7. We say a value of 1 would mean a perfectly valued stock, under 1 would mean undervalued, and over 1 would mean overvalued. We have an interesting duality with TSM here where implied growth shows us overvalued, but the enterprise value ratio shows us undervalued. Finally, the last thing I want to look at is institutional ownership. It's quite low, only 3.3%, and it's relatively unchanged over the past 12 months, which is also interesting considering the stock has fallen so much. Institutions often buy after big drops like we saw last week with Meta. One interesting thing to note though is the top institution here, Berkshire Hathaway. They invested over $4 billion this past November when the stock was down in the 60s. And who likes value more than Buffett? So how do we summarize TSM? If it weren't for the geopolitical nature of Taiwan, I'd say we have a great value here. Even with the geopolitical situation, I'm still tempted to buy. You have a company with a huge percentage of the market, supplying components to some of the hottest products on the market like iPhones, MacBooks, and appliances. They are getting more efficient with that widening gap between revenue and earnings, and they are diversifying fabrication globally, which will make them even stronger in the future. The demand for semiconductors is not going away anytime soon. This is a market that will continue to grow for a long time. TSM is a really strong value right now. That's it for today. Please like and subscribe if you found this helpful. And if you really want to support the channel, please go to Proceemo.com and subscribe to our monthly service to see analysis like this for yourself for only $5 a month. And if you have a stock you'd like to see featured, please comment below. Thank you. Happy investing. Go find some value.